This is the MTpredictor weekly market update for March 3rd of 2013. And we can start here with the S&P as we typically do. Again, we're in that weekly decision point resistance area, and you can see the S&P. This is the area where we're starting to see the index here struggle. You see last time it came into a major decision point resistance. We saw the correction here on the weekly chart. So we're in that same area. We talked about this 1520. I anticipated we'd get to 1520, and then the top of this range around 1560. If it can't get out of this area, then we're going to see that correction. If they can power through this, as the Dow has made some progress, and we'll look at the actually we're going to look at the Russell as well. If they can power through this, then like I said, we've got more upside ahead. We'll take a look at kind of a larger pattern as well in just a bit here. But again, we talked about protecting, anything you've got that's only geared to make money when the market goes up. It's time to protect those positions. We've been talking about this for a while once we came up into this area, so it's been a few weeks. We've seen, like I said, maybe we've had a 200-point drop day in the Dow and then a recovery, and you can kind of see the that action. We anticipated the higher volatility. We looked at the VIX. I think it was last week and the week before, where we were in an area of complacency, and we talked about, look, this is the area where we typically see an increase in volume, in volatility, and then of course that week we got the spike in volatility. So we'll see how this plays out. Again, protect anything to the long side. We'll see if it either can power through this area, and then we do have more upside above that if it can get through that 1560 area. If we look at the Dow here, we see the Dow has made progress. We talked about that 14,000 to 14,100 area. It's gotten to 133. All right, but again, the S&P is in a little more, still in that resistance area, hasn't taken out that 1560 area. And you see the next area above here, we'll begin just below 15,000 in the Dow. And so this, now the future contract has led to cash. So whereas the future contract has taken out the prior high from the 2007 highs, the cash has not yet. But typically we talked about the future leading the cash, whereas before we had the cash leading the future. So that's changed. Again, the problem with the NQ here, you can see, let me just add a little more data to this. Oops. That's all it's going to give us. But the issue here is you can see that the NQ, and we talked about this, once it went wave 5 up here, again, after 5 waves you typically will get a correction, which we've gotten here. But now the problem is, it's as the Dow and the S&P, and we'll look at the Russell as well, have all made new highs here past, over their wave 5 swing there, the NQ is still struggling in here, and that puts it in this dangerous potential wave 2 area. It hasn't been able to get out of here, and again, the danger there is we have a what we call a holy grail setup, and if this ends up being wave 2, if they can't get out of this area here, this ABC was actually an ABC on the daily chart, then we could potentially be going to wave 3. Obviously, after a major high, this becomes a potential wave 1 into 2, and then wave 3 down here on 2200. All right, so it's the only market that really is in agreement. And if we look at Apple, I'll pull that in here. Again, Apple, obviously a big component of the NQ there. had the 5-wave pattern up. We looked at that. We said the correction typically would be back to the wave 4 decision point, and then I said we got to close below that decision point area. All right, and if we took out the low there being 435, that's not a good sign, because the tendency then is, if they take this area out, if Apple does not snap back up into this area here, the tendency is they're going to wipe out this whole 5-wave pattern up. So we can go back to the bottom of wave 1 here and take our decision point tool, and you can see this is the area. If this gives way, the tendency is, we'll see this area now. We've got a little, we'll have some support in between here. This comes in right around about 330 in Apple. All right, but if this gives way, then effectively from this point you've cut the price of Apple in half, which it's just a possibility because of the tendency of the pattern that we have here. If this does not snap back up into this zone at least, then that first the 330 area, and then this comes in around 260 would be the bigger or larger target there. So we'll have to see how this shapes up. Again, it's not a good sign that it took out that low there. So keep an eye on that, and again, that with the NQ is the kind of the lone holdouts here. Let's look at I'm going to pull in the some interesting charts here. First on the Russell. This is the Russell, courtesy of barchart.com, and this is a 25-year chart here. But you can see the pattern. There was this kind of ascending triangle here, and it's broken out of that triangle to the upside, obviously to new high there. And so we had a higher highs, going back from 99, successively higher highs, higher lows, and now higher highs. All right, so that's a good picture there. If we then look at the let's take a look at the S&P here. Okay, now here with the S&P, we have this, it's called a broadening pattern here, and what that means is we've got, you can see how this area is getting larger as time goes on. It's kind of an inverted triangle, or some call it a megaphone pattern, and this is usually a signal of potential market top. Now you usually don't see these, they're kind of rare, but you did see them a lot going back to 1929 in a lot of the stocks back then that had these broadening formations. And again, it's 9 out of 10 times it's a bearish formation. You can see we're not to the S&P has not made the new high, so we've got a higher high here and lower lows here. We'll see if it does. That's why I think if the S&P can get through that 1560 area, maybe it makes a run for the top of this trend line here. Around that 1600 area, we could take a decision point off of the top here. We'll look at that in the other chart to figure out where a major resistance area would be up there. And then we've got to be really careful. Now, the other thing that can happen here is, let's say, we do make the new high, and of course we would anticipate some type of correction, and it may be kind of 50% of this area, or it could, be worse. But the other thing that can happen with this is we can get kind of a diamond, what they call a diamond top, where we have this kind of inverted triangle here, and then we come down into a triangle up here, and that again is a very bearish setup. And I think something like 80% of the time, if it breaks to the downside, which better than 50% of the time the break is to the downside out of the diamond pattern, about 80% of the time it retraces the whole move up into the diamond pattern, which would be a huge, move down in the S&P, and the Dow has the same broadening top. Maybe we can take a look at it in just a sec. Okay, so here's the Dow, and again that same broadening formation. Again, typically a bearish sign of a market that is topping. And again, this is this is something that could take, if it forms a diamond, this could take a couple of years to form that type of pattern. So, but I'm just kind of bringing it to your attention so you can see overall. We don't see this in the Russell, but we see it in the Dow, and we see it in the S&P, and so just something to be aware of. It's just kind of a warning sign. It's probably an early one, but if we do get a new high, again that would kind of play into this broadening formation, what we would anticipate, and then it may be 3 new highs and it's done, or one of the what they call an orthodox broadening top. We get a here's 1, 2, 3, 4, and then you get 5, and a smaller correction, and then what they call 5B, and then the major drop. And so it's something again to keep an eye on. We'll take a look at it as more time goes on. I was just looking at the Australian dollar, US dollar here, and that another kind of symmetrical triangle that's formed, that's been consolidating. We looked at this a while ago, and I'm just kind of keeping an eye on it because again this will break one way or the other. We don't know which way this will break yet, but it's something again to keep an eye on. All right, let's look at the weekly chart of the dollar index. Again, we had our major low that came in. You see the target there. It just missed it there. It's what we talked about is it found obviously support here, little W forming. We'll see if it gets back to the target. Obviously this moving higher. If we check our euro US dollar, we should see that it's moving lower, and we talked about the short signal that had set up there, and in order for this to get to make some progress, it was going to have to we'd have to see the dollar moving higher there, and we're at the 100% initial risk line. So if you are short this, those clients that maybe short this, you can have your stop to break even there, and you'd be in a risk-free trade. See if we can get down. We can take a decision point off the wave B swing here. You're going to have some support in here in between the entry and the target, so just be aware of that. You want to see it close below that area and see this decision point get taken out. If it does, then the tendency is good that we'll see the ultimate target. And let's look at oil here. Again, the oil long here that we've been monitoring came just short of the target there. Again, you can have your stop to the entry for a risk-free trade at this point, and we'll just see how this finishes out. Saw some weakness in here on the daily chart, but we'll see how this finishes out. If it does come out and take this low out, then find support again around that $80 area, which it has. going back here, if we want to take a decision point off of this, puts it around 76, 77 would be the next major support below 80. And then, of course, we want to take a look at our gold and silver. In fact, I actually want to look at the continuous contract there. All right, so gold, again, we talked about this little descending triangle that's formed. We're at the bottom of that range there, and we'll see if this holds. So far, not, it's obviously bounced off of that, but then has come back down and maybe just close to testing it again. But again, we're in an area where typically, let me just put, yeah, this is the just below the 50 period. Here is the red line, and the 200 period below that. So you can see that, let me stretch this out. Okay, just had to add some more data to that. But you can see, again, going back to the start of that bull market, basically in 2001, and we talked about all the, every year we've had a new high since then in gold. Each successive year we had a new high. Here was your crash of 2008. The 200 period provided support there, nice major buy signal. But all these opportunities below the 50 period, above the 200 period, were all good buying opportunities in this bull market. So we're in that situation where we're below the 50 period and above the 200 period. We've seen this before. We've seen the 200 period before, and the bull market was still intact. We didn't get a new high in 2012, and that's why I think we're in this period of extended consolidation. Again, we've seen this before as well. In gold, we've had these extended periods. Here's an extended period from June of 06 basically to August of 07. Okay, so a long period of consolidation, and then this thing broke to new highs. And so we'll see. We'll see if this holds. Again, I won't be surprised to see the 200 period. There's a lot of kind of things going on behind the scenes. We can look at silver. Just pull this up for a second here and add some data to that. It should be good. Okay, and again, this same descending triangle. Typically these break to the downside, and so again, that won't surprise me if they do, with all the things that are kind of going on in the background there. We've talked about some of this stuff before, but because of this major top here, which was our wave 5 high, if I can put this on here. Okay, that was our, went basically maximum wave 5 up. This could potentially be a wave 1 into a wave 2, and again, we're in this kind of period of consolidation here, and we'll break out of this one way or the other. It won't surprise me if we do break to the downside, but silver hasn't come and tested that bottom yet. But if we've done this before, I just project the wave 3 down from this. Now this would put silver down $15. Okay, now silver comes down to $15. It may be the buying opportunity that maybe a lot of people have been waiting for to get it at a real bargain. If we see that, then we'd see the gold testing its 200 period. And so it's a possibility. We'll see. The problem is we've had succession of lower highs, and we haven't been able to get through that. So we'll see as silver, if it comes down back down to this area, if it makes another run, and eventually if they can break it to the upside. We'll see. If not, and they break to the downside, again, like I said, it won't surprise me. And I would look at that more as, we'll look at it closer if the time comes that happens. We'll look at gold, see where it is, but that may be a major buying opportunity there. Again, for long term, 2 to 10 years out, I'm talking hedge against the Fed, if you will. Finally, let's just look at the bonds here, and you can see there's a long here in bonds. There's a setup there. It's achieved the 100% initial risk line, so stop could be to break even for risk-free trading. And this is a weekly chart, but if that is long, then we would expect interest rates to be a short, which they are here. This is the 30-year interest rate there, and there's the short setup there. That's in, and just about achieved the 100% initial risk line, so same policy there. There's the target, and interestingly, if we go to the daily chart, the daily chart is short here on a nice 5-wave pattern up, and the bonds were a 5-wave pattern down. So in this case, we'd expect the correction back to the wave 4 DP, just as we looked at with Apple, with all the markets. It's the same. The patterns are the same. So we'll see how those play out. And we've gone a little bit over, but I covered a lot of ground there. A lot of it just food for thought stuff. Again, this is bigger picture stuff, but hopefully it's been helpful, and we'll pick things back up and see if we've made any progress one way or the other next week. All right, have a great rest of your trading week.